I have a meeting at 10 o'clock. So let's get into this opinion piece from CoinDesk. It's Bitcoin's value depends on its decentralization. Why the investment thesis for Bitcoin is built on the network's decentralization. People sometimes ask me for a single reason why I think Bitcoin is an attractive investment. It's simple. Bitcoin is the hardest monetary asset ever created. By hardest, I mean hardest to create more of. It's the monetary asset in which I have the highest confidence that the supply is limited. It's like gold, but better. Now, a lot of people, obviously, if we're talking about issues within, I guess, the world where we have digital restrictions going on, where you have a potential for things like EMPs, etc., whatever it is, if the world goes really bad, huge natural disasters, all of that, let's be honest, gold would be better because you're going to have a hard asset that you possess physically. That being said, I don't think either of them would really necessarily be worth anything because at that point, it's going to be due to your skill set. So definitely still work on like classic skill sets, whether that be farming, fighting, shooting, whatever, right? Like work on those traditional skill sets if you're really worried about, global distress based on like whatever is happening in today's current times. But I just thought I would point that out because it's a little silly. Like we always hear this, it's like gold. I mean, yes, but no, because it is reliant on essentially this whole crazy network of things going on and all this power staying on, the lights staying on all the time. It's still reliant on that. While currently the annual rate of both gold supply and Bitcoin supply is roughly 2% of the quantity that has already been mined, Bitcoin's annual rate of production falls by 50% roughly every 4 years until it falls to zero sometime next century, the year 2140 for those that aren't aware. Therefore, based on current supply schedule, Bitcoin's annual rate of issuance will be roughly half of gold's and will continue to fall, making it significantly more scarce than gold. Gold's scarcity and therefore its value is constrained by its high cost of production. Gold is too expensive to manufacture by nuclear fusion, and it's also expensive to mine. In contrast, Bitcoin's supply is constrained by its decentralization, which springs both from its original design and its history. Decentralization is the key. Decentralization isn't a goal unto itself. Instead, decentralization is key because it makes the Bitcoin network maximally resistant to attack from anyone who might seek to change its monetary policy and thereby threaten its inherent scarcity. No other cryptocurrency comes close to Bitcoin's level of decentralization, and it seems unlikely they ever will. So what makes Bitcoin the most decentralized digital asset? Cryptocurrency mining in particular. I don't know what he's going to say here, but I'm just telling you the fact that it's proof of work is probably the number one factor to it being so decentralized, even with the onboarding of ASICs onto the network. And as we see, which is really exciting, we're having more and more companies create ASIC miners, which means we're going to have more competition within the ASIC mining scene. And hopefully that also leads to basically general access to the public, which is the big argument of GPUs versus ASICs in my humble opinion. The most straightforward way to change an organization is to influence its leader. Bitcoin has no leader. Its founder, Satoshi Nakamoto, has managed to remain pseudonymous for well over a decade. And ever since Satoshi ceased communicating with the Bitcoin community, no individual or group has managed to exercise enough influence to make significant changes to Bitcoin's monetary policy. No other digital asset can make this claim to having a long track record without influential leadership. There is no leader to coerce, no committee to bribe, and no constituency strong enough to change it. And this is why, like, when we talk about Bitcoin maximalism, this is why I always have leaned towards that that idea and why I trade my Ethereum that I mine for Bitcoin, there's these reasons within why Bitcoin works are very distinct and very difficult to repeat. Even Ravencoin has a bunch of people that sort of do influence its monetary policy and the network in general. This is unique in basically any sort of monetary system in any currency, and that's why it has the most potential to change the world, in my opinion. Running a node is as easy as a Raspberry Pi. One of Bitcoin's most important decentralizing factors is the ease with which a user can run a node. Such nodes both relay transactions through the network and also verify the entire transaction history. This allows anyone to verify the entire transaction history of Bitcoin and also make sure that future transactions comply with the rules of the protocol, including the fact that no Bitcoins are double spent and that the overall supply is strictly limited. All this can be done with less than $300 worth of computer gear and a low bandwidth internet connection. For digital asset networks that support higher numbers of transactions or offer greater feature functionality, higher memory and bandwidth requirements result in lower numbers of nodes that tend to be managed by corporate entities instead of individuals who are invested in the network's success. Ooh, is that a direct shot at things like Binance and Solana? Sure feels like it. All right. If advances in computation continue as they have in recent years, we may soon live in a world in which people can run Bitcoin nodes on their smartphones. This could drastically increase Bitcoin's node count, which would further decentralize the network. Bitcoin mining spreads coins. And this is the big one, right? Let's see what they think and say about this. So, Bitcoin's mining process requires expenditures on both equipment and energy. This has caused distribution of Bitcoins from miners to individual holders over the years because miners have been forced to sell significant numbers of coins in order to fund their operations. This system contrasts with proof of stake systems, which tend to reward a small group of founders with free coins at the beginning and then allow them to maintain their stakes over time and avoid selling coins to fund the energy expenditure required for mining. Tangent here, a cool thing about the open network, don't know if it's going to go anywhere. I don't have a ton of confidence in it, but a cool thing of the way they went ahead and took care of emissions for that initial emissions launch was creating contracts and actually utilizing mining to create, of course, the new coins that people have. That's a better way of doing it than a lot of like the airdrop things that were going on with proof of stake, etc. So I just thought I'd point that out because I thought it was interesting, the correlation there. While some publicly traded Bitcoin miners have managed to raise capital in order to accumulate Bitcoins on their balance sheets, this strategy has yet to survive one of Bitcoin's notoriously brutal winters, in which companies reach the end of their funding runways and have to cough up coins in exchange for fiat money. Perhaps this time will be different, but in the meantime, it's probably safe to assume that some miners will eventually have to sell off some of their Bitcoins. Moreover, this distribution of coins from miners to new investors is augmented by the sale of coins by early investors. Just as with the companies like Amazon, early investors sell off their holdings over time as the value of those holdings grow. So it is with Bitcoin. The fact that Bitcoin has already been around for 13 years and reached a total network value approaching 1 trillion suggests that Bitcoins have already spread significantly. As Bitcoin's value increases, large holders will likely diversify out of Bitcoin as new participants build their positions. 13 years of conflict prove Bitcoin's decentralization. When the U.S. Constitution was inked, it was a great idea, but it had yet to be tested in the real world. Centuries later, the governance system detailed in the Constitution has so far proven robust to challenges and attacks. Yeah, it's all good until people stop following it, right? Bitcoin has likewise survived numerous challenges in its 13-year history. accumulating in the block size wars. In this struggle, a group of companies with interests in Bitcoin attempted to change the protocol to allow an increased number of transactions per second. A vocal minority of node operators and developers resisted this change, based partly on the risk that increasing the block size would increase the size of the blockchain and therefore make it more difficult to run a node. Such a change could have reduced the number of nodes in the network, thereby reducing its decentralization. The lesson drawn from this conflict was that Bitcoin would not be changed by an economically powerful group of individuals seeking to impose their will over the objections of the average users on the network. Completely opposite of what's happening with Ethereum, right? And it's super interesting because one of the things that we have to talk about too is like the influence of the nodes and the miners over Bitcoin compared to the influence of the devs over Ethereum. So the oligarchs were forced to bow to the will of a group of vocal plebs, and crucially, this power dynamic proved Bitcoin's decentralization. Bottom line, thanks to its design focused on implementation, lack of identifiable leadership, low barriers to running a node, and proven track record at resistance to co-opting, Bitcoin reigns as the world's most decentralized monetary network. This makes it the monetary asset with the most credible scarcity. In my view, in a world where fiat money appears to be losing its purchasing power at a high rate, these qualities make Bitcoin the most attractive monetary asset to hold and the best long-run risk-adjusted investment opportunity available. I would say land, like property, is probably the one where I would set ahead of Bitcoin for sure. But, you know, I definitely agree with this opinion piece in a lot of areas. I think that mining is more significant than nodes to a certain extent, but nodes definitely need to be available to run on, you know, easily run on cell phones for sure. I mean, at the end of the day, getting a lot of the blockchain onto cell phones is going to be the key to unlocking Web3. We've talked about this before on the channel. And I think that's a big note that we have to take into account. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.